Welcome back to Market Fatafat. Let's keep it going with all the buzzing trades that are seeing action as of now. And one of the stocks that is seeing action is indeed Symphony. On the bottom of your screen, you will see the earnings, a great set of numbers being reported, and the stock is up by 6% as of now. But let's go across to our technical expert then, and Nagaraj is joining us on the technical front. And Nagaraj, let's talk about your first counter, that is Lemon Tree Hotels. What a move in today's trading session. We have seen great moves from the other hospitality counters as well. But what exactly are you spotting on Lemon Tree Hotels?
Hi, good afternoon. The Lemon Tree is continuously moving up last couple of sessions, and if you look back the whole chart pattern, the overall chart pattern is looking positive. We have seen some good outperformance in the stock price over the last many months. Higher tops and higher bottoms is intact. Weekly 10 and 20 period EMA is intact and offering strong support for the stock price to move up. Recently, it has moved above the consolidation band of the last 2-3 months and a couple of months, in fact, around 140, 142 levels, currently trading higher. I'm expecting this upside momentum to continue, and the next upside resistance to be watched is around 165 for the stock.
All right, coming to you, Ashesha, SBFC Finance is what you've picked out. I believe it's in the back of a block deal. In fact, the stock is down and now trading with cuts of almost 4% in trade.
Well, yes, you are right. It is on the back of a block deal that took place today morning. Nearly 5.6% equity changed hands today morning, and promoter group is the most likely seller in this block deal. Yesterday, we had reports which suggested that this block deal could take place in the price range of 87.5 to 91.7 rupees per share, which is at a discount of about 4.5% to yesterday's closing price, and the total transaction value could stand at about 550 to 600 odd crores. So on the back of this block deal that took place today morning, where promoter group is the most likely seller, the stock is down nearly 3.5%.
All right, yes, the stock is indeed under pressure, but Nagaraj, one of the gas-related counters, that is IGL, showing good up move in today's trading session. Tell us what are you spotting on the technical front?
Yeah, IGL has bounced back very well recently, and after the sharp decline of a later part of the October, the stock has consolidated and gradually moved up. Currently placed at the resistance of around 475, 480 levels, the overall chart pattern is indicating that this resistance is likely to be broken on the upper side. So I'm expecting further upside momentum for the stock, and the next overhead resistance to be watched is around the 522.
All right, then that's about one of the counters, that is IGL. But moving on, let's focus to Granules India as well. One of the positive news coming in for this particular counter, and the stock is holding on to the gain since the start of the day. 1.6% uptick as of now, wherein the company has announced that Granules India has received an ANDA approval for colchicine capsules by US FDA for their new ANDA drug. Other than that, what the company is also saying that the company has now have a total of 64 ANDA approvals from the US FDA. 63 are the final approvals, and one of them is tentative approval. And for this particular drug that they have got an approval, the market size is approximately $55 million as per IQVIA. So a decent drug size for Granules India, but receiving an ANDA from US FDA is indeed positive, and hence the stock is holding on to the gains as of now.
Well, coming to you, Nagaraj, JM Financials is what you have picked out for us. The stock has given us gains of 11% in the last 1 month and seems to be on the up move. Tell us, what is the upside that you're seeing for this one?
Yeah, this JM Financial, after the sharp decline of February-March month, it has consolidated in the previous couple of months and recently started to move up. And today's sharp upside breakout is indicating that the stock is likely to resume its fresh upside momentum after the important bottom reversal somewhere around 70 levels. I think there is a strong resistance is placed around 94, 95 level, which is a gap resistance, the opening downside gap of previous few months back. And I think that gap is going to be taken on the upper side. So the next important resistance we watch after this gap is around 102, 103 for the stock price in the next 1 month.
All right, we have the management of Tata Chemicals, R. Mukundan, Managing Director and CEO Tata Chemicals, joining us.
Good afternoon.
Right.
Well, yes, that's about Tata Chemicals. Tata Chemicals did come out with its earnings this time around, where we have seen some bit of a pressure coming in onto the number front. But let's understand more that what were the factors that actually helped the numbers this time around. Hi, very good afternoon. This is Shrishti joining in. First of all, a decent set coming in for the company. Tell us more. What were the factors that were at play for the company this time around? How were the numbers panning out, and what is the outlook for the margins going ahead?
Yeah, in terms of the numbers itself, Shruti, I think we had what I would say the normal run of the market, but really because of the pressure in margins in European market, we had to take a one-time write-down of our European assets of about 900 crores, which has resulted in a non-cash charge. Other than the non-cash charge, the units have performed to our expectation. The market is fairly balanced. In terms of the European market continues to be under pressure. Indian market is growing, especially we've seen the chemical sector and the detergent sector having strong growth. The American market, the economy is performing well, but we're also watchful of the situation, the geopolitical situation, as well as the Chinese market, because that plays into a large amount of the pricing and volume numbers. But overall, we are fully sold out this year, at least for the first 3 quarters, I can say with a lot of assurance because of contracts in hand. And it's largely up to the pricing move. While it has bottomed out, we are all looking towards when it will start to trend upwards. It has been a little longer than what we thought. Also, you see, as the interest rate readjustment starts to happen, we believe that the uptick will start to happen in most markets. However, the market most under stress is Europe, which is what has caused the one-time write-down of almost about 960 odd crores.
Right, Mr. Mukundan, we did see the weakness in Q4 amid the pricing pressure on soda ash across geographies. What could be the outlook ahead for the soda ash demand in India and the overall industry?
Well, in terms of the numbers, when you take the EBITDA number quarter on quarter, there may be some reduction. But in terms of volumes, actually, the Indian market sequentially, as well as the US market sequentially, has done significantly better than last quarter. Of course, there's been a slight amount of margin pressure in India, but this is only temporary, and I think we will be able to get back to normal margins going forward. So really, our view would be that the market is bottomed out. It is going to trend up in our main business. As far as the second largest business we have, salt, it is continuing to perform very strongly in both India and in UK. And all other products are on a good even keel. Our subsidiary Rallis has done well in the Indian domestic market, albeit some pressure in the international market, which also our belief is it's at the bottom of the curve as we speak.
Okay, Mukundan, Mr. Mukundan, just wanted to have your view and more details rather on the write-off done in the UK plant.
This is a accounting testing which we do every year, and the underlying asset and its ability to generate cash flows, and it's in that basis being done as a non-cash charge. If markets improve, this can move either way. So, as I mentioned, the European markets have been most under stress, and the energy prices in Europe are almost 3 times what they were pre the unfortunate war in Europe. So we do think that it'll take a bit more time to correct itself, which is what we thought it was prudent to do what we've done. Apart from the one-time charge, I think all of the financial metrics are as we had expected. And going forward, this quarter, we will be commissioning almost a 250,000 ton capacity in soda ash in India and another 200,000 tons of salt during the year. And pharmaceutical salt will get commissioned. Part of it will be pharmaceutical salt, which will get commissioned in the UK of about 70,000 tons. So the growth projections which we had in the project execution we had, that is on schedule. The fundamental point being, while the world market is at the bottom and is flat, we do think that it start to trend up. However, Europe would probably take much longer than what we thought in terms of improvement, and that's why we've taken the charge as we've seen in those days.
Right, Mr. Mukherjee, also give us an outlook on the China dumping of soda ash.
Actually, the issue is not so much from China. The material actually is coming in large volumes from Turkey. As you know, Turkey used to have a large market in Europe, and that market has, as I was mentioning, has collapsed by about 1 million ton out of 6.5 million ton, and that has led to a lot of that material landing up in India, close to about 500,000 ton. And uh, so, really, what you're seeing in Indian market also is a reflection of what has happened in the European market, and I think in general the bearish trends in Europe are continuing. They're also at the bottom, but I think they are it is probably at a bearish levels, which is going to take much longer than all other markets. If you look at general economic conditions, India and US are fine. Europe is under stress. Africa is doing fine, and so is Latin America. Broadly, that's the trend we see.
All right, Mr. Mukherjee, just before we let you go, just wanted to have a word on the earnings outlook as well, because some of these brokerages are highlighting that the earnings seem to be likely remain under pressure or near the current run rates through the most of FY25. So, as we step into FY25, can we expect some better earnings, or the earnings growth could be the current run rate on itself?
So, as I mentioned, if you look at it, the bulk of the earnings momentum will come from volume increase, which will happen during the year. And we are more or less sold out for first 3 quarters. The real issue is whether pricing improves towards Q4, which is when we go for fresh contracts. We hope if the situation in Europe improves by then, I think the conditions will be far better during the year.
All right, with this, Mr. Mukherjee, we'll let you go on that. Thank you so much for joining us today on ET Now. So that was the management of Tata Chemicals highlighting the earnings this time around. What are the factors will be at play in the times ahead? But have a look at the markets as well, because Nifty has scaled to a record high level, and that's after 10th of April. We are seeing great gains on the Nifty 50 index, though we have just come a tad bit lower after touching that all-time high levels, but nevertheless still holding on to the gains of 112 odd points. We have already seen Nifty Bank touching the record high level. So all in all, good day for the markets. Record high level for Nifty Bank index and record high for the Nifty 50 index for now as well. So, but with this, viewers, let's slip into a very short break in this edition of Market Fatafat. Don't go anywhere. We'll be right back.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade. Trader Nagaraj, coming to you then. Just Dial is a stock that you have picked out for us. Good stellar moves coming in this last 6 months. It's more than 50% gains. In fact, in the last 1 month itself, it has given some 35% gains. Is there more steam left for the stock? Today also, it's trading strongly with gains of 4%, almost close to its 52-week high. What's the upside?
From here on, the whole chart pattern recently has shifted into a sharp upside momentum. The bullish flag breakout is visible on the chart, and looks like it is going to test the next overhead resistance of around 1210 to 1215 levels in the next few weeks of time.
All right, that's about Just Dial, but have a look at the markets then. What a move that we have seen, though we just marked a while back the all-time high levels for Nifty 50, but Nifty Bank is definitely taking the lead right now. 1% gain coming in on the banking index. The index is up by 500 points, and all the large cap names are participating, from the likes of IndusInd Bank, ICICI Bank, HDFC Bank, Axis Bank, you name it, and you will see great gains coming in on all these banking counters. See, IndusInd Bank higher by around 3% as of now. Axis Bank also up by 1.5%, and a sharp spike from the heavyweight HDFC Bank as well is what you can see happening. So just a while back, all of a sudden, all these banking counters have shown great moves, and seems like no stopping. So a good move on the banking index, and all in all, the markets are doing really well, Ankita.
Yeah, in fact, this up move has come in just recently, a sharp spike of almost 0.7% coming in, and also continuing the momentum that we saw on Nifty Bank yesterday, with Nifty Bank hitting the all-time high. But the momentum continues, and Nifty Bank sitting pretty with gains of 500 points as of now. But we'll move on to the stocks that are buzzing away in trade. RVNL, in fact, a sharp cut came in the morning, and this is despite the fact that the company's JV has received a letter of acceptance from Southern Railway. KRDCL RVNL joint venture received an LOA from Southern Railway for the redevelopment of Thiruvananthapuram Central Railway Station on engineering, procurement and construction of EPC mode. The project is set to cost around 438 crore rupees and is scheduled to be completed in the next 42 months. However, we do see RVNL reeling under selling pressure, is trading with cuts of more than 0.5% in trade.
All right, that's about RVNL, but one of the stocks that is definitely in the fast lane is Ashok Leyland, just ahead of the auto sales data. Though we are expecting good set, the stock is on the roll. Nagaraj, tell us how are you looking at the breakout of Ashok Leyland, and is 200 quite close for this counter then?
Yes, obviously, because it was showing a larger range-bound action since last 7-8 months, and last couple of weeks price action is very amazing. It is now in an attempt of decisive upside breakout of the larger range movement around 190, 195 levels. I'm expecting this to move up further, and next overhead resistance to be watched on the upside breakout would be around 220 to 225.
All right, Nagaraj, Shesha, thank you so much for joining us today. Thank you for all the stocks, giving us all the stocks that are buzzing in trade. But we're joined by the management of Symphony, Nirupesh Shah, who's the MD of Corporate Affairs Symphony, joining us now. Hi, Nirupesh, thank you so much for joining us today. Mr. Shah, hi, Mr. Shah. He's joined us today on Symphony that has reported its Q4 numbers. In this sweltering heat, of course, it has given a strong boost to the demand, and also the fact that, the higher sales and lower RM costs have aided the numbers. How is this likely to continue, and what does the demand look like on ground for the next quarter?
Yeah, so the quarter and the year bypass. For the quarter of March, this has been the highest ever sales, and this is despite we couldn't execute some of the orders which we received in last few days. Secondly, as it is witnessed, there has been a decent improvement in the profitability margin, coupled with substantial improvement in the subsidiaries performance. Number one, IMCO Mexico has done phenomenally well. GSK China is turning around, and climate technology, the transformation is underway, and it has also improved, still of course under rate, but doing better. So that is part one. Part two, of course, this scorching heat and decent summer for cooling industry is helping a lot, and we are witnessing the decent tailwinds even in the current quarter. Especially in southern India, Maharashtra, central India, and eastern India, to an extent, in some of the models, there is also a stock out.
All right, Mr. Shah, this is Shrishti also joining in. Firstly, congratulations on a good set of numbers, but wanted to have your take on the margins as well, because for the last 3 quarters, we are seeing your margins above that 15% mark, and today, this time, this is 17.2%. Going ahead, given the strong demand momentum, do you believe that the margins can see an improvement from these levels as well?
Certainly, on an annualized basis, our aspiration is to go back to original historic margin, and we are working towards that.
All right, so Mr. Shah, given the strong demand in the cooling products, are we seeing a shortage firstly, and is there any chance of taking another price hike or lower discounts to leverage the demand?
No, so as far as summer season is concerned, otherwise also we never grant any discount. And in selected model, there has been somewhat price hike, and wherever somewhat subvention or consumer financing we have to subsidize, we have stopped that.
Mr. Shah, just wanted to get you back on the margin outlook that you just shared, that the aspiration is to improve the margins. But from 17.2%, where do you believe that the margins could be headed? Any number or any range that you can help us with on the margin guidance?
So on a standalone basis in India business, historically our EBITDA at its peak used to be at about 30%. So aspiration is to reach to that. I'm not giving any guidance. I'm not giving any commitment when and how. And similarly, on a console level also, we are certainly looking at even better margin profile, and we are heading towards that.
All right, Mr. Shah, you know, on the overall basis, the foreign subsidiaries have been showing signs of improvement, but the Australia unit has been rather weak. By when do you see a turnaround there?
So as far as Australian subsidiary is concerned, some of the initiatives what we have already taken have already started yielding the result. So when we acquired the company, its fixed overheads or CODB used to be about $15 million per annum. That is close to about 90 crore. Now we have succeeded in rationalizing, and now it is half to it. That is almost about 45-48 crore. And that's how in last 2 quarters, its gross profit margin as well as EBITDA margin percentage has shown the signs of improvement. And secondly, even some of the models what we have launched, that has also helped. So especially in last 2 quarters, there has been a decent improvement in margin profile of Australia, and rest of the major transformation measures should be executed by September 25. That is completely outsourcing all its product and making it asset light. And air coolers will be outsourced from India by September 25, and the rest of other products from China. Secondly, some of the products have been already revamped, and many other products are being revamped, and that should also be launched by September 25. And we already have now created a decent distribution network. And with this launch of new models, we expect that next year should be much better than even current year. And our improvement, what we are witnessing in last 2 quarters, will continue in the time to come.
All right. Also, Mr. Shah, the analysts are penciling in like 15% growth in the domestic market for FY25. Will you be able to surpass the same?
No, so we are not giving any guidance as per our IR policy. But as I said that in the current quarter, that is in the month of April, so far there has been a decent performance, decent growth, decent demand.
All right, Mr. Shah, thank you so much for joining us today on Market Fatafat. But with that, viewers, we have come to the end of the show, and it's time to wind down on this edition of Market Fatafat. Ashesha, Nagaraj, Osho, thank you all for joining us. It's goodbye from Shrishti and me and the team that put the show together. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.